Hey everybody, it's Pete. Welcome to Stock Trading Pro. Today we're going to talk about the stock market crash and which are the best stocks to buy right now while the stock market is crashing. Is there the right list of stocks to buying? Should you be looking to learn how to be a short seller? Well, we got a big list for you today. I got the official legal pad out today to walk you through everything. I want to make sure we don't miss anything. The stock market is amazing right now. What a glorious time to be a trader. We keep talking about the volatility and the percentage moves that some of these stocks are making. So today's Stock Trading Pro is going to be a really lively segment. We're going to talk about two sectors that were still strong yesterday and are going to be at the top of the list. We're going to walk through a stocks market screener to tell you which stocks should be at the top of the list. And it's a really easy stock scan to run to show relative strength or relative weakness. In this case, we're going to be looking at relative weakness with the way the Dow Jones and the rest of the market got absolutely crushed yesterday. We're also going to talk about Meta. We're going to talk about Starbucks, and we're going to talk about inverse ETFs. Then we're going to do a little bit of a deeper dive into sectors and groups. We're going to make sure that you understand the stock market power pyramid and how the stock market power pyramid should influence what you're looking at right now. And I'm going to walk you through short selling. A lot of people, short selling is new, scares a lot of people. But look, with the way that the market is trading right now, the stock market crash is forcing us to either be on the sidelines, look for those little pockets of opportunity of stocks to buy, or if you really want to level up, you start to learn how to short sell. So we got a lot to talk about today. Stick around. Be back in just 1 second. Okay, so thank you so much, everybody. We're actually going to get right into it. Obviously, we don't have to really tell anybody what happened yesterday. The market yesterday just got absolutely clobbered off of the economic numbers. Now, one thing I do want to point out, and I'm actually going to get this off the screen. If you happen to be on the day trading side of things and you are looking for good opportunities right now, it's critical that you have a indicator on your screen, which is called VWAP, volume weighted average price. And I'm going to tell you why. Yesterday, there was a lot of confusion in the market where I was watching comments on YouTube and on Twitter and inside our Facebook group. And a lot of people, how do I know if it's gone too far? Well, volume weighted average price is probably the number one indicator that I think most day traders use, quite honestly. And that volume part of it is really important. I'm actually going to show you that right now because we all understand how to use moving averages, right? Moving averages are basically, in this case, it's the 50 period moving average. It essentially means if it's a 50 period moving average, 50, that means that it's calculating the close of the last 50 candles. So that could be a 5-minute candle or it could be a daily candle. Either way, it's the last 50 candles, right? And that basically connects the dots. And a lot of people understand that that's how you measure what a lot of people call uptrend or downtrend. The scope of the slope is going to determine the depth or the conviction that you should have in that buying or selling pressure. In this case right now, selling pressure. Now, what's interesting about VWAP, volume weighted average price, if you can understand and get the context of what it means to use a moving average, VWAP is a moving average kind of on steroids because it essentially adds volume into the equation of what that line looks like. So I just want to show you this because we get a lot of conversations about how do I see it in real time? How do I see it when it's happening and not 9 o'clock at night? I want to trade stocks. I want to be on top of it, but I see it too late. You have to know what you're looking for, and then you have to trust what you see, and then you have to trust that you'll take the right action. So this is kind of exciting. So if we take this moving average off of the chart and we pop in VWAP, this move right here in the afternoon. So if you could visualize this, is very similar to what is a moving average, but it includes volume. So the reason that volume weighted average price is so significant is that line is not only telling you the trend of prices, but it's telling you which side of that trend most volume was traded. So it accomplishes two really big things when you're trading stocks, again, especially if you're day trading the stock market, is it gives you an idea into bullish or bearish bias, B3. I just came up with that. But more importantly, when it's obvious, it acts as a very reliable support and resistance level. So again, support is where buyers do something significant. Resistance is where sellers do something significant. So here's the point. There was a lot of questions in the afternoon yesterday. Is it too far, right? In our Discord community, a bunch of questions about, yeah, I understand it's obvious. I understand it's going down, but how do I know I'm not short selling too late? I'm not getting involved too late. This is where you have to trust your edge and trust what you see. And if you would have done that in the afternoon yesterday, this move right here where the VWAP support came in, this is a 7-point move in the afternoon, even after this big move to the downside. And we can go over example after example of stocks that held VWAP resistance, stayed below VWAP the entire day, and would have led to some really good afternoon moves. So if you happen to miss that move in the afternoon yesterday because you didn't trust that it was stopping, or in other words, that it was still going down, I can't stress this strongly enough. When you're a stock trader, you have to trust your edge. First, you have to develop one, then you have to trust it. Remember, now this is the big thing, and this is something that a lot of people just really have a hard time with, which is it's not that individual trade or when you buy that stock that you need to trust. Of course, we want that idea to play out and we want that stock to make money in that moment, but true confidence, or the right type of confidence when you're trading stocks, is over time, not just that one trade. So we're looking for the results over 10 trades, not just that individual trade. So when you see signals like that, you have to trust that over time it's going to do what you expect it to do. So just that one move in the afternoon yesterday, with the right mindset, could have made your entire day. So if we hop on now and look at the futures, obviously we're up a little bit today, which is a little bit of, I don't know what language you would give. We get people like, people are like angry all the time. It's a dead cat bounce. So whatever you want to call it, we actually hit the skids, hit the bottom, and now we're kind of getting like this echo of a little bit of a move to the upside. Do I believe the market bottomed out yesterday? Absolutely not. No way in the world. The numbers, we still have more numbers. We got more numbers coming out next week with the Fed. We have more numbers coming out this week as well. Not that many economic numbers, although Oracle should be one that you watched yesterday. If you remember, we actually were paying attention to Oracle yesterday. I just want to bring that back into the screen. And this is what Oracle did yesterday. And this is the move that it had off of earnings yesterday, which actually brings me into the big thing I want to talk about today. So we're going to work our way through the stock market power pyramid and which kind of stocks. So we obviously know that right now, the bottom of this picture right now, in the big picture, the market itself is not on the same side as the bulls, which means now that we need to work our way up here. So let's be clear about what we're doing here. Prior to the market opening, and I usually do it on the 7s, I do it 7 o'clock at night, and then I review it at 7 o'clock in the morning. And I just want to give you a little bit of insight and I guess a suggestion from trading experience. It's very important that you do your work at night when you're doing your game planning, when you're doing your scanning, when you're doing your screening, because you cannot rely on the fact that you might not have something to do the next day. You might be busy the next day. Maybe if you happen to be commuting, somebody spills coffee on you and you think you're going to do it when you get to the office in the morning. Maybe you lose power in the morning and then it comes back on when the market opens if you happen to be trading at home. Do yourself a favor and do your research at night so that you are prepared for the next day. And no matter what happens in the morning, you actually have your list. So as we work our way up the list, we now need to go and find some opportunity in individual sector. So obviously, if you've been a regular viewer of our channel, you know what that means. That means that we start out with sector performance, and you can see how we're working our way through the week. If you remember yesterday, we actually had mentioned that the strength of the one-day performance actually showed that it wasn't as strong, and that kind of was a precursor. Now, heading into today, we're actually looking at basic materials again. So we're going to start out with basic materials, but this is really where you separate yourself from the crowd. As you're trading during the day, again, it's critically important that you jot down notes. You start to pay attention to which stocks are fighting the market, which stocks are not getting pounded with the markets. Now we're going to walk you through a different scan, which is the primary one that I want everybody to take a look at here. So this list of stocks right now, everybody knows that we're looking for long-term bullish order flow, right? That's the first criteria. If we find bullish order flow, we're like, okay, great. Smart money is involved in those stocks. They're spending real money. I'm going to look for a stock to piggyback with them. But what about on a day like yesterday? What should we be paying attention to? This is the biggest challenge that a lot of people have. They're looking at the market and they're saying, well, most of those stocks were negative, so nothing was strong yesterday. And that's not actually the case. That's not the truth. There were stocks that showed bullish intraday order flow and held the bid. So that's terminology that you want to know is called held the bid. So this list of stocks right here is a preliminary scan that I ran last night. Now you'd be like, wow, what's the big deal? Why are we looking at these stocks? There's so many of them, they're all red. Only a couple of them are green, right? This is where you start to go a little bit deeper into your stock trading before you're looking for stocks to buy. We ran this scan last night, and this scan, and again, if you want to take a screenshot of it, I'll put it up here one more time so you can take a look at that. This scan right here is stocks that were positive from yesterday's opening price. So when we're setting up opportunities to buy stocks, we obviously start out where the higher time frames dominate. We want to take a look and find ideas. Where are deep pockets, hedge funds, banks, whoever happens to be buying those stocks, spending a lot of money and pushing those stocks up? And how long have they been doing it? And that's a part of what we call order flow stacking. That's one of the ways that we look at the market. If you can identify that on the big picture over days, weeks, and months, you're like, wow, that's really cool. Somebody's spending a lot of money and paying higher prices. I'm going to hop on board until I see that change. So remember, everything we're talking about is order flow and stacking that order flow, looking to see if it's obvious. The second part is, how do we know if it's still valid? And that's tape reading, right? So those two combinations right there, those are the first things that we need to do when we're in the stock market before we even look at opportunities to find entry prices. Clearly, the way the market traded yesterday, there's not even a question that the market got clobbered yesterday. So we're not looking at that bigger picture other than this little pocket of opportunity. We're going to talk about basic materials and one other group. But the more important thing is this. So this list of stocks right now has relative strength to yesterday's opening price. So all of these stocks will be at the top of my list today of stocks that had relative strength, closed above the opening price. So despite where they closed from the previous close, intraday, with all of the selling that happened in the market, they held the bid. So this list of stocks will be the first list of stocks that I'm going to be looking at today. So that's just one way of sorting it. So that's the list right there, right? So it's a pretty decent sized list. And we're going to talk about Starbucks in a second and CF. Now, the next question comes in is, how can we improve that list? So the way that we improve that list is now we take a look at this list. So this list right here is very similar. And you can see that we have the same criteria: over $15, over $1.50, and over 2 million shares. Now, that happens to be my criteria. We get a lot of questions about, why is that my minimum criteria? Average true range of $1.50 or more is volatility. That's giving me a certain amount of base volatility or price movement so that I have an opportunity to make reliable money. In other words, average true range over the last 14 days moves at least $1.50. So there's price action in there. And if that stock is in my watch list, there's a good chance it's going to move enough on a regular basis of at least $1.50, so I have a chance to make money. So that's the first part: volatility and chance to make money. The second part of that reading is average volume, over 2 million shares. Now, we get a lot of feedback that that's a lot, forcing a stock to have a lot of volume in 2 million shares. It's not really that much, but I want to tell you why I want that. Remember what I just said a couple of minutes ago about smart money, the deep pockets, and it's our job to track when they stack order flow and then participate with them. Well, that stacked order flow is real money spent. So what I'm looking for to combine with volatility is smart money attention on a regular basis. So when a stock averages 2 million shares or more, that tells me, and combined with average true range, volatility, it now has volatility and volume. And that volume part is smart money, real money being spent. But more importantly, professional traders first focus on risk. So if there's enough liquidity based on 2 million shares per day, that means that there is a realistic chance that I can get in or out with size anytime that I want. Now, sometimes the market's flying and you might not get that exact price, but when you combine volume with volatility, I believe, and for this is the way I've been trading for the last 23 years now, it's a perfect balance of a chance to make money plus a chance to manage risk in exchange for getting bigger share size. The one thing I want to point out, though, is a lot of people will trade stocks that don't move that much. And we'll get a lot of new members who come into our boot camp asking about, what do you think about this $3 stock? Or what do you think about, and we take a look at it and it really doesn't move that much. Now, what these traders are mistakenly thinking is, first, they're probably trying to hit a home run. They're looking for this big lottery play, and I don't do that. I only trade the market leaders. But the second part is really kind of like a hidden thing that a lot of people don't take into consideration. You're thinking that I'm going to keep my risk down simply because the stock doesn't move that much. So I'm not going to lose that much. And I made that mistake when I first started trading. I remember I was trading Bank of America way back in 2000, stocks like that. The problem is you're also keeping your opportunity to make money down. So you're not going to lose a lot, but you're not going to make a lot either. So it's very important that for you personally, depending on your risk tolerance, the size of your account, all that kind of stuff, what kind of volatility can you handle? And then you trade those stocks, because it'll be a nice match of you could make money and you can manage your downside and eventually get size. So how does that all translate into what we're looking at right now? Well, this list is a little bit different from this list. So this list is just a list of stocks that changed positive from the open, right? And that's good short-term relative strength. This list here also is net positive from the previous close. So this list of 6 stocks right now, LI, RIVN, ZIM, SHPH, Mosaic, and CF, those 6 stocks were not only positive green candles yesterday, which is the minimum, I want to be clear, the minimum relative strength that I would want to see to put a stock into my watch list while the stock market crash is unfolding. It's telling me something. Somebody stepped in there and said, no, we're going to hold the bid. That's the first part. Now we're improving that list and we're working our way up the stock market power pyramid, as I just showed you. Let me just bring that back into the screen. We're now working our way up the pyramid into specific industry groups. So if we go back to that list, we can now take a look and see consumer cyclical and basic materials. So these 2 basic material stocks will be at the top of my list. So if we go over to the charts of CF and MOS, we want to pull those up and we're going to work this a little bit deeper. So let's get Oracle off that chart and we're going to take a look at CF. So CF, again, if you're a regular viewer of the channel, you know that 50-period moving average is the last line in the sand that we look at from a Dow theory perspective. It's the last place that we'd look for a new swing trade. So CF not only held this big 50-period moving average support, it's holding that big number of $100, and it closed green. So that's one of the reasons it's going to be in my list. And MOS, very, very similar. Now, what's kind of exciting about MOS, which you can see it's actually up a little bit, is it also traded down, took out the previous low, and buyers kind of stepped right back in. And you can see that we're getting some consistent support here right around this $51, $52 level. So now we're starting to work our way into that list. Now, how could we improve that list a little bit more, or maybe even work that where maybe the stocks had one big down day? How do we now look at a little bit of a wider list? Now, here's the thing. Do you even need a wider list? This is something that we talked about on Monday night's coaching call, and it's really a big deal. I got news for you. You don't have to trade every day. You have to trade when the order flow is stacked in your favor and you believe that there's a good chance it's going to move in your favor versus moving down to your profit target. Here's the thing. If you do not have confidence in that right now, based on the way the market got absolutely hammered yesterday from the CPI numbers, the core CPI numbers, and the way inflation came back into the stock market yesterday, there's nothing wrong with you staying in cash and being smart and saying, I don't believe the odds are in my favor right now in the big picture, so I'm just going to protect precious capital and stay on the sidelines until a sign I see it bottom out. If you happen to be on the other side of the market where you understand short selling, we're going to talk about that in a second. But before we do that, I want to go into the 2 groups of stocks that we just talked about, which number 1 is basic materials, as we just talked about, which MOS and CF, right? But I want to talk about another group of stocks that you might not have known were pretty strong yesterday, and that's electric vehicle stocks. Has anybody watched what NIO has done over the last week? Also, we're going to talk about solar stocks. If you remember last week, I believe it was last Wednesday or Friday, we talked about it, where we said this group of stocks, and again, working our way up the power pyramid, again, I just want to keep an eye on here, was technology stocks, and then solar stocks, and then the individual stocks in the solar group. That's one group of stocks we're going to look at. But has anybody watched this sneaky dog right here, NIO, over the last 5 days? You can see it's actually kind of holding the bid here again. This is a pretty big move. So as you start to put together your list of stocks, you have to say, okay, NIO, wow, relative strength. What's going on? What's going on in that group? Now you need to go over to other electric vehicle stocks and other parts of that area, such as electric vehicle charging stations and take a look and see which of those are showing relative strength, if they are. And then those stocks float to the top of your list. So what we're talking about now is how to build a list of the best stocks to buy now during a stock market crash. I want to be clear about this. Remember, I want to say this every day because it's that important. What do I want to see? And if I see it, then I'll trade. Okay. What do I want to see? And if I do not see that, I don't trade. So what we're talking about right now is building a list of ideas heading into the day and the rest of the week. If what we're looking for follows through, meaning those stocks that had held the bid yesterday. So again, I'll pull that list up again just so you can take a snapshot of it. These lists of stocks that were positive from the open, and LI was actually positive from the open and net positive, as well as these two guys here. If these stocks come back with more buying pressure, then I will be looking to buy them. Now, here's the thing. If these stocks do not show follow-up buying pressure and the market gets heavy again, I'm not going to trade them. If these stocks trade strong and they're above VWAP, volume weighted average price, which we just taught you at the beginning of this video, then I will look for entries. That is something you want to watch again, because this is where you level up. I'm going to say this to you. If you understand chart reading, if you understand technical analysis, and you're struggling, you probably don't know yet that chart reading is not trading. What we're talking about right now is elevating yourself beyond chart reading and learning how to be a trader. Traders are going after money. Chart readers are going after patterns. So all this stuff that we're talking about right now, it's not enough to recognize a head and shoulders pattern. It's not enough to recognize a candlestick chart pattern. You have to understand, how does that pattern equate to risk reward? That is the difference. So I'm just going to say what I just said before. This list of stocks, if they show bullish pressure again today, if they do. Now, first, they're in the list because of yesterday's relative strength. They're positive from the open. We're going to get into Starbucks in a second. We're going to get into electric vehicle stocks and a couple of charging station stocks. And we're going to talk about Meta in a second. If that list of stocks that I just showed you also shows relative strength today, and they're trading above VWAP, volume weighted average price, then I will look for entries. Only then. If those stocks do not trade above volume weighted average price, I will simply leave them alone and only look at the ones that do. If you are new to trading, and it doesn't matter if you're day trading or swing trading, because we could say the same exact thing using longer term charts for swing trades. If we just zoom that out, because I could hear some people say, I'm not a swing trader. It doesn't matter. You do the same exact thing with the 50 period moving average, and you say that if it's trading above the 50 period moving average and it's above a certain price, let's say the previous close, just as an example, only then will I look for an entry. That is what will separate you at a barbecue from all of your friends that say the market's crashing, I don't know what to do, and I'm frozen and I can't find any ideas. You now have the roadmap, or at least the basics of the roadmap, to understand when to put your capital into the market, when to put extra capital to the market, and when you should be in cash and just waiting for better ideas. We had a big conversation about this on our coaching call on Monday night, Wednesday now, Monday night, where a lot of the conversation was, as soon as you stop taking the trades that you know you shouldn't be in, you instantly start to move closer to profitability, because now you're not throwing money away and now you're just letting the odds play itself out. So this is pretty important. So I want to do what I talked about before, which is we're going to actually do a little bit something different, and we're going to talk about this. This is something that is new to a lot of people, which is short selling. So if we could imagine a stock at $50, as the stock moves down, you're essentially betting that the stock is going to move down. If it moves down and as it moves lower, you can place a limit order on the bid to cover for a profit. If it starts to rally after it goes down, you can still get out for a profit, but you can try to get on the bid, but you probably won't. You will have to buy it or cover it on the offer, which is very important. If you short sell it at 50 and you believe it's going down, as it's going up against you, you now have to get out aggressively or at the offer to get out on that price. Now, why am I bringing up short selling? Short selling is betting on the market going down. Now, a lot of people understand options and buying puts. When you buy puts, you could either be hedging against a long position, or you could just straight up betting on the stock going down, which, a lot of people are doing. I don't know if Brian Carr is on the call right now, but Brian Carr has been trading Amazon and a few of the other large cap tech stocks very well, quite honestly, using puts on the short side of the market. So buying puts, looking for it to go down. If you are open to understanding short selling, there's a world of opportunity open to you right now if it meets the criteria that we just outlined. So that would be the opposite of the criteria. And I'll pull up AMD actually as an example, just to show you that chart again, and we'll put in VWAP, and we'll take a look at this on the 5-minute chart. If you understand short selling and you get this kind of an idea, you can understand how much selling pressure there is and just continue to look for short sell ideas. So what I want to do is, first, obviously, that's a very quick primer on short selling. If short selling is new to you, I will tell you this. I think everybody understands the criteria for looking for stocks to go down, if you're okay with doing that, right? The challenge that I believe that most people have with short selling is how to exit a short sale. If it goes down, the language is you're buying it back, but the proper trading language is you're covering it. So short move to the downside, you cover it to get out of it for a profit. That's where the term short covering rally comes from. And I'm sure everybody's heard of that. A short covering rally implies they were going down and they bought it back quickly. And if that happens quickly, that's a short covering rally. So it's going up, but it's people covering short sales, implying a move to the downside. If you are not comfortable with short selling, but you still want to get involved with a stock market crash, but you don't want to buy option puts and you don't want to short sell stocks, you can trade the inverse ETFs. The inverse ETFs go up when the market goes down. So if we take a look at those in same software we're using before, FinViz, if we go over to maps and we go over here to ETFs, what you want to focus on is look at this big green patch over here. These are the inverse ETFs. Now, the ones that we trade most of the time in our community are the SQQQ and the SDS, probably this one here, which is the NASDAQ. So if you could see what the market did yesterday and stayed below volume weighted average price the entire day, the SQQQ was strong, and you could have bought this in the afternoon, 45 to basically almost 47. So a $2 move to the upside yesterday in the SQQQ while the market was going down. So you see there's a lot of different ways to hit the market. But here's the big thing. And I got all my notes here. I got all my notebooks and everything right here. Trading becomes infinitely easier. And I don't use that word lightly. It becomes infinitely easier when you know what you're looking for, only look for what you're looking for, and then only trade when you see it. The challenge comes in when you don't know what you're looking for. Let's take that out of the equation. Let's say you do know what you're looking for. The challenge comes in is when you want to trade for excitement, when you want to trade for, like, the market's open, I have to do something, I have to put on a trade this week, but nothing's going on and you trade anyway, or at least nothing obvious based on the way that you look at the market. Very, very important that you discipline yourself to say, this is what I'm looking for, but I don't see it. Therefore, I'm going to keep my money in my pocket and be smart. Now we're going to shift our way over into the groups of stocks that have been strong to show some relative strength. Now, tech stocks, large cap tech stocks, have gotten absolutely pounded over the last week and a half. And I think at the top of that list right now, let me get VWAP off of there, have been, for us in the community, has been AMD and NVIDIA. Now, there's one other one that's been a really big stock that we've been looking at on the short side of the market right now, and that's Meta, actually. We talked about Meta from a business perspective, and I just want to zoom this out a little bit. This 155 level has been a level that we've been watching, very similar to what we've been watching in Zoom, where Zoom continued to hang around this $80 level and below. So both Meta and Zoom, if they trade and remain below those two levels, there's a lot of room to go to the downside. So they have room to go, which is profit potential. So remember, just moving in a particular direction is not enough reason to put a trade on. You need it to be moving in that direction, buy it at the right time, or in this case, short sell it at the right time. And what's the right time? What is the optimal entry? The optimal entry is when the distance between your entry and the expected initial profit target is bigger. Now, there's a lot of stocks right now that have been down 7 days in a row, and they're not even close to the optimal entry. Even if they're obvious in direction, they're not good trades because of how far they've gone recently. Given a lot of good trade management lessons today. You might want to watch this one more than once. So let's go back over to the electric vehicle stocks, and we're going to take a look at those ideas as some ideas to be looking to be a buyer of today. And you can see we have the list here. So we're going to drop in the 50-period moving average again because we know that's the line in the sand. Now, LI, it was positive yesterday and met that criteria as far as what it was from the open. It was up 2.84 from yesterday's opening price, but now we want to stack that a little bit more. It's well below the 50-period moving average and clearly still in bearish order flow. So we're not going to look at this as far as it being near the top of the list in electric vehicles. We know that NIO has been strong lately. We know that Rivian has been strong lately. So look at Rivian actually with the way the market's trading. 1, 2, 3, 4, 5. 5 out of the last 6 days positive. So buying's coming in. XPEV, absolutely not. Lucid has shown some good buying pressure the last couple of days. Also closed above the open, but still well below the 50. General Motors also right near a breakout level. So keep an eye on that guy. Tesla, if you remember, we talked about this the other day. We need to see this get through 312, and Ford's just kind of meandering around, but it is above the 50 based on the last week or so. So now we just broke that down even further. We went to a group of stocks that traded above the open from yesterday, and then we qualified that a little bit more to take a look at stocks that are also above the 50-period moving average. So if you're looking for new ideas today, I think we can still run that scan together. Let's actually run that right now. If we go back into FinViz and we do that minimum criteria that I was talking about before, that brings up 228 total stocks. Let me actually zoom that in a little bit for you. And let me get myself off the screen. That's just the minimum criteria. Now we want to work this down a little bit more. We're at least above the 50-period moving average. And you can see that brought it down to 96. And let's see if we can get a list of stocks that are also above the 20. That now brought that down to 52. That's fantastic, right? How could we improve that a little bit more? Well, are there any stocks that meet this longer term criteria that also changed positive from the open by at least 1%? And that brings up this different list. Now, this actually brings up an interesting point because I want you to point out this list right here of these stocks. Now, again, they finished positive yesterday as well, right? Change from the open and positive. It's a little bit different from the other list, which was this one, because this was different criteria. And I'm going to let you take a screenshot of this, put that up on the screen just so that you can have this list as well. Let me pull that up. It's this list of stocks right here. So above the 20, above the 50, and also up 1%, which is a little bit different. This brings me to probably one of the most important points for today. When you are doing your game planning, which is kind of a follow-up on what I said before, that I strongly suggest you do it at night. Do not save it for the morning because other stuff that you don't expect can happen in the morning. You want to do it at night, let it sit in your head, you let it percolate in your head, and then the next day you're just reviewing it to see if any news came out that might have changed the story, right? This list of stocks now meet the criteria. So they're going to go into my list of stocks, and they will be the list that I'm going to be focusing on today because they meet the criteria. But remember what we said. They still need to meet the criteria after the market opens, and it doesn't matter if it's a day trade today or a swing trade for the remainder of the week or maybe over the next week. They still need to meet the criteria that we gave you before. Probably the most important thing. And that wasn't planned. I'm actually glad that happened. Do you see how we just came up with two different lists of stocks? Both of those lists of stocks had bullish criteria. That's what you need to do when you start to do your game planning and when you do your screening. That's what it means to go on a treasure hunt every night. I love to call it a treasure hunt because you spend that extra hour at night or 30 minutes, whatever time you want to do, however much time you have to allocate to it. That's where the money's made. When the market opens, that's simply looking for entries and managing trades, right? Profit targets and adding and that kind of stuff. All of the real money in the market, all of the skill, the confidence, the belief that you expect to make money comes from being prepared. Being prepared with an edge, being prepared with your software set up properly, and being prepared to understand how to find stocks that meet your edge. And you scan for those stocks, what we call hitting from different angles, which is kind of exciting. So anyway, I just want to finish up with just one thing, if you don't mind. So obviously I have my research document that I do every night and I give to our community every night. Stocks in play and breaking it down and earnings and all that kind of stuff. We just went through a lot of stuff, right? And I'm sure I hit you with a bunch of stuff. Maybe some of it's new. Maybe it's not as organized as that for you. If you'd like for me to do it for you and you want to trade together for a couple of weeks, there's a link below this video if you want to learn about our next bootcamp, which actually starts next week. If all this is new and you want to trade with me and get into my community for a couple of weeks, just let me know. No pressure. Just click the link. There's a whole video on there explaining how to do all of this. And if you find that is good for us, I'd love to see you on the other side. If you have any follow-up questions about the scanning and the ideas that we talked about today, specifically the electric vehicle stocks that showed relative strength, the basic material stocks that showed relative strength, leave a comment below the video. I always get back to everybody. Leave a comment if something we said today is something you don't understand. We'll try and explain it as much as we can. If you want to take it a step further and have me do all this work for you, click that link below the video, and I'd love to see you in the next bootcamp. All right. Thank you so much for joining me here today, everybody. Have an awesome day. I will speak to you soon. I really appreciate the time that you give me.